Welcome to New Way Finance Academy, your ultimate guide to financial intelligence. Today we're taking a look at two telecom titans that have captured the attention of dividend investors worldwide, Verizon and AT&T. Dividend stocks are a great way to generate passive income, and these two are often at the top of the list. Which one is the better pick? Stay tuned to uncover which of these giants holds the potential to be the best dividend stock of 2024. Before we dive into the comparison, do us a favor. Show some love by hitting that like button, subscribing to New Way Finance Academy, and ringing the bell for notifications. Now, without further ado, let's get started. To appreciate our analysis, it's crucial to understand what dividend stocks are. In the simplest terms, dividend stocks are shares in a company that pays out a portion of its earnings to shareholders. These payments, known as dividends, are usually distributed on a regular basis, often quarterly. Investing in dividend stocks can be a smart strategy for several reasons. First and foremost, they provide a steady stream of income in addition to any potential capital gains. This is particularly advantageous in a low-interest rate environment, where traditional savings accounts may not offer significant returns. Moreover, companies that regularly pay dividends are typically well-established and financially stable, making them less risky than growth stocks. They also offer the benefit of compounding when dividends are reinvested, which can significantly boost your long-term returns. However, it's important to remember that not all dividend stocks are created equal. Factors such as the company's earning stability, payout ratio, and dividend growth rate are all crucial considerations. With this understanding, let's take a closer look at Verizon and AT&T. First up, we have Verizon, a leading name in the telecommunications industry. This powerhouse has consistently shown stable performance over the past years, even amidst the market's ups and downs. A big part of Verizon's appeal is its commitment to rewarding shareholders with dividends. Now let's talk numbers. Verizon's payout ratio, that is, the percentage of earnings a company pays out to its shareholders as dividends, has been relatively steady. This suggests that Verizon is not only profitable, but also manages its earnings efficiently to ensure a consistent dividend payout. The story gets even better when we look at Verizon's earnings per share. In the past few years, Verizon has demonstrated a consistent growth in earnings per share, which is a key indicator of a company's profitability. This paints a positive picture for Verizon as it signifies the company's ability to generate profits. Now, let's shift our focus to the future. As we look ahead, Verizon's prospects seem promising. With its robust 5G network expansion and strategic partnerships, Verizon is positioning itself for long-term growth. Additionally, the company's focus on diversifying its revenue streams through avenues like digital advertising and content services further strengthens its growth potential. But it's important to remember that no investment comes without risks. In the case of Verizon, the company faces fierce competition in the telecommunications industry and must continually innovate to stay ahead. Also, the high costs associated with network upgrades and expansions could potentially impact future earnings. Clearly, Verizon holds strong potential, but how does it compare to AT&T? Now, let's turn our attention to AT&T, another titan in the field. AT&T, a household name in telecommunications, has a track record that speaks for itself. With a history dating back to the late 19th century, it's proven to be a resilient player in the industry. Looking at its past performance, AT&T has consistently provided dividends to its shareholders, even in the face of challenging market conditions. Moving on to the payout ratio, it's an important metric to consider when analyzing dividend stocks. It's the proportion of earnings a company pays out as dividends to its shareholders. AT&T has a reputation for maintaining a high payout ratio, which means it's been committed to returning a significant portion of its earnings to its shareholders. This is a testament to the company's confidence in its financial stability and future profitability. Now let's talk about earnings per share, or EPS. This is a company's profit divided by the outstanding shares of its common stock. For AT&T, its EPS has been relatively steady, demonstrating the company's ability to generate consistent profits. However, like any company, it's had its ups and downs, and future performance will depend on various factors, including the overall health of the economy and the competitiveness of the telecommunications industry. As for future prospects, AT&T is not resting on its laurels. It's actively investing in areas like 5G and fiber broadband to stay ahead of the curve. These investments could potentially drive future growth and, in turn, support the sustainability of its dividend payments. In summary, AT&T's past performance, high payout ratio, steady EPS, and future growth strategies make it a compelling consideration for those seeking dividend stocks. However, investing is not without risks, and it's crucial to consider your financial goals and risk tolerance before making a decision. Both Verizon and AT&T have their unique strengths, but which one emerges as the best dividend stock for 2024? It's time for the face-off, Verizon versus AT&T. As we step into the ring, it's crucial to remember that the best contender isn't necessarily the one with the biggest punch, but rather the one who can go the distance. Let's begin with Verizon. The company has shown consistent growth over the years, with a robust dividend yield that has been a reliable source of income for investors. Though Verizon's debt levels are a bit high, they've proven their ability to manage it effectively without compromising their dividends. The company's steady growth and strong management give it a solid footing in this financial brawl. On the other side, we have AT&T. Their dividend yield has been attractive, but the company has faced some challenges. The high debt levels and the company's decision to cut dividends to focus on reducing said debt has left some investors feeling uncertain. However, AT&T's ambitious plans for expansion and their focus on growing sectors like 5G and media content could potentially pay off in the long run. Now let's put these two heavyweights side by side. Verizon's steady growth and robust dividend yield make it a strong contender. The company's high debt levels are a concern, but their proven ability to manage it effectively lends some assurance. AT&T, on the other hand, has a higher risk factor due to its debt levels and recent dividend cut. Yet, its ambitious growth plans and focus on emerging sectors can't be ignored. There's potential for substantial long-term returns if the company's strategies pan out as planned. Ultimately, when we compare the financial parameters of both stocks side by side, it's a real tug-of-war. Verizon offers stability and consistent returns, while AT&T presents a potential for high growth, albeit with a greater risk factor. It's evident that both stocks have their merits, but our analysis leans towards. After thorough analysis, we believe that the choice between Verizon and AT&T as a dividend stock investment for 2024 isn't as black and white as it might initially seem. Both companies have their strengths and weaknesses, and the decision largely depends on the individual investor's financial goals, risk tolerance, and investment horizon. Verizon, with its consistent dividend payments and stable business model, appears to be a more secure bet for investors seeking steady income. The company's commitment to innovation and expansion into new markets, such as 5G, also makes it an attractive prospect for long-term growth. On the other hand, AT&T, despite its recent challenges, shouldn't be dismissed outright. Its diversified business model and ongoing restructuring efforts could potentially deliver significant returns in the future. However, it's important to note that these potential rewards come with a higher degree of risk. In a likely low-interest rate environment in 2024, both stocks could provide a valuable income stream for investors. However, as always, we recommend conducting your own thorough research and considering your personal financial situation before making any investment decisions. Let's remember, investing isn't a game of absolutes, it's a game of odds. By understanding the strengths and weaknesses of each company, you can make a more informed decision that aligns with your individual investment strategy. And that's all for today's analysis of Verizon and AT&T as potential dividend stock investments for 2024. We hope this discussion has provided you with some valuable insights and helped to clarify some of the key considerations when evaluating these two telecom giants. Thank you for joining us at New Wave Finance Academy. Remember to like, subscribe, and turn on notifications for more financial insights. Until next time, stay financially savvy.